Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. You made it to Friday. This is BRN AM for Friday, October 25th, 2019. And here are our top stories. You may have heard about them in different forms, but what exactly are alternative investments? And how have these alternative investments performed over time? Many of you have heard of the term alternative investments, but what does it really mean? And what are the subclasses of alternative investments? Well, I'm really pleased to be joined by Tucker Piner, joining us from the United Kingdom. He works for Bloomberg LP and is an expert with alternatives. Hi, Tucker. How are you?
Hi, Jeff. It's good to see you again.
It's good to see you as well. And you've been in the UK now for about 18 months, correct?
Correct. Yes, sir.
Yeah, and you are part of Bloomberg LP's Alternatives and Investment Mandate Division. Can you talk a little bit about what your role is?
Yeah, absolutely. So I moved over, as you said, from New York 18 months ago with the goal of building relationships with the asset owner community and the asset managers, really trying to understand where people are looking to allocate, what types of strategies, what's the ticket size, and get a clear picture of this entire alternative landscape and private data. We wanted to have Bloomberg be the platform that could connect those two sides of the coin, and it's been exciting.
Yeah, absolutely. And Bloomberg is such a well-known brand. For folks who may not be aware, Bloomberg not only has its own television channel, the Bloomberg Television Network, but it has a terminal and it sells information to many different parties, investment managers, consultants, advisors, and I mean many. It's kind of like the benchmark, right, Tucker, for many in the industry.
I appreciate you saying that, and I do enjoy this side of the alternative world because a lot of people are coming to Bloomberg to try to figure out where to make that next decision. What is the data showing, and what is that relationship they could build? And there's a lot of uncertainty, so I think Bloomberg has a good track record of being that platform to connect the buy side teams together.
Yeah, a long history. So our audience, we hear the word alternatives a lot, okay? Whether you're an institutional investment person, a registered investment advisor, an employer, or an individual. Can you just define first alternatives, what that means, and then what types of alternatives there are? I think that would be helpful for our audience.
Yeah, it's a great question there, and for your audience specifically, we are mainly talking about the institutional side that's looking at a fund that we're private. It's going to be private data. It's going to be someone usually that is domiciled in the Cayman Islands. We're seeing a lot more liquid alternatives or alternative UCITS now within the European market, but it just means that the strategy is going to have higher liquidity requirements. Longer lockup periods. It could be completely private, as in the private equity space. We'll classify that as an alternative fund. It could be an open-end fund like a true hedge fund, but it's going to have an event-driven strategy or a distressed debt strategy or a vol arb strategy. Basically, the idea is that it's a more sophisticated investor, a more sophisticated manager, and a little bit of a riskier opportunity. And that's why there's certain restrictions on who these alternative funds can market to. And a lot of it comes down for Bloomberg on, are you allowed to market to a retail investor, or are you only allowed to market to an accredited investor? And that's actually where the data on Bloomberg switches from any client to an accredited investor client.
And just visibility. Thank you for that. And two questions for you. So when we define alternatives, you mentioned hedge funds, you mentioned private equity, but it could also be infrastructure, it could be distressed debt. I mean, there are unlimited flavors, really, of these products because the manager, it's not a private market, it's a private market where a mutual fund is a public market, right? Is that kind of how you would define it?
Absolutely. I wish I had the capital to even invest in some of these funds, but as a retail investor, I don't even fit these minimums. A lot of them are, some of the lowest ALSI is 100,000, but the highest ALSI could be $5-10 million to even put your capital inside the fund. And the regulatory authorities, your FCAs, your SECs, try to protect the investor and saying, is this an eligible opportunity for you to even view this prospectus? That's something that we at Bloomberg take very serious, because we would never want to display a fund profile that should only be viewed by a certain audience. And so that's when we say alternative, it's that entire bucket, it's that umbrella.
Yep.
The private equity, the hedge funds typically. But you're right, there are other funds. I don't work with them as much, but there are infrastructure and real estate funds out there for sure.
And you mentioned the term accredited investor, and just by definition, that's someone who meets a certain net worth or salary threshold.
Yeah, it's $5 million US dollars in assets as an entity, and it's actually on the SEC's website. Something that I'd be happy to send you guys some more information on. But it's something that our compliance department would then review that person applying to view hedge fund data on Bloomberg, and then be able to be permissioned based on if they fit the certain requirements of that AI definition.
Absolutely, well, that's great. I think it level sets for the audience. Now, in terms of the Bloomberg platform, and specifically what I'm interested in is some of the due diligence, because you've got all these different flavors of products. The due diligence, meaning how you get under the hood and understand what you're looking at. And a mutual fund, it's open, transparent. There's prospectus, right? There's services like Morningstar, Lipper, Bloomberg, just to throw that back out there, that you can look at information. With a alternative investment, that information is not always readily available, and hence the requirement to do a lot of due diligence.
Absolutely. I'm glad we're getting to that topic, because it's timely for me. I'm actually doing a project to help clean up our entire data set, and we're adding websites to these certain fund profiles. But even the websites sometimes are just the name of the fund, username, password. So you're right, there is a lot of questions when it comes around what's inside this fund. And that's where, to peel back the onion, a lot of it has to deal with those first couple meetings. I mean, Jeff, if you and I were going to give someone $100 million, we're going to want to know everything about them, their family history. It's going to be, I would want to know every single bit I can. But the reality is that, they're part of the hedge fund strategy is to go out and work with their investor relations team to fill out their DDQs, to understand who might be a good investor for them. And that's where I think where Bloomberg does come in, because we can post some of those due diligence requirements on our mandates platform, and from there be able to say, all right, is this even an opportunity for me as an asset manager to go out and try to win that business, to try to build that relationship? That's something that every investor takes serious, and every asset manager who wants to be effective in this space should take very serious, because you might get one meeting with an asset owner to really prove your worth and to say they should trust you with their capital. And that investor, we just had a service provider panel recently for a hedge fund startup conference, and that's massive, because you want to have an audited track record. If let's say you're carrying your track record over from another fund, or you're just a new launch, and you want to be able to say you have the right prime brokers in place, the right custodian, the right administrator, because without that, most of the institutional money isn't going to want to talk to you.
Yeah, absolutely. So track record, it's like any manager, you want to have the track record, but also the deep dive. I mean, that information is exceptionally important. And many, just to kind of describe who might be investors, you talked about the accredited investor, but who might be investor? Obviously, high net worth individuals, people who meet that threshold. You've got pension funds, you've got endowments, and you've got other pools of assets.
Yeah, sovereign wealth funds. I was just talking with the Kuwait Investment Authority. KIA is an active investor in alternative funds. You've got sovereign, family offices, massive amount of family offices in the European region and in the U.S. as well. Foundations, really anyone that fits that asset requirement that might want to have this diversification in their portfolio. Find out what manager is going to produce alpha in a market that is obviously showing some uncertainty. And I think that's really where hedge funds started to exist, is being able to live up to that promise of being able to produce those returns. Mm-hmm. And now the ones that will survive are going to be the ones that continue to keep the trust of these investors. But yeah, you're exactly right. Government pensions, company pensions, we'll define asset owner in a number of different ways, but the highlights are those family offices, pension funds, and endowments for sure.
That's great. So I want to take a quick break. We come back, we're going to talk to Tucker about some of the performance, because not only does Bloomberg track this due diligence data and facilitate discussions between asset owners and potential partners, but they also keep a tremendous amount of data. So stick around with us, stay tuned. We'll be right back here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. That was an excellent breakdown on what makes up alternative investments. Tucker Piner's still here with us, and now we're going to talk a little bit about alternative investment performance. He is joining us from the UK, so a little bit of a time difference. Tucker, thanks so much for joining us from your home, and appreciate the conversation about alternative investments.
Thanks for having me. It's good to be back from Jolly Ol'.
Yeah, there you go. So great setup for the audience in the first segment about alternatives, what they mean, the need for due diligence. And that's a lot of data that you and the Bloomberg team manage. I mean, there must be reams and reams of people who work at Bloomberg to support this effort. Now let's focus on the performance. And I don't want you to name names of particular funds. I don't think that's fair. And it's not really what we need. But we just had Q3 complete. This show is running on Friday, October 25th. So what can you tell us about general performance among the alternatives that you all track at Bloomberg?
Sure thing. So September was a relatively tough month overall, but year to date, every asset class, every hedge fund strategy, and Bloomberg's actually built hedge fund indices, and we have 25 of them now, from your equity hedge, credit hedge, macro, event driven, across the board, and then underneath that, different styles: distressed debt, merger arb, long bias, short bias. Every single strategy is year to date positive, which is exciting and encouraging for the business. But if you're going to be charging 2% management fees and 20% performance fees, obviously the overall market, the S&P is up 19% year to date. Right. So it's definitely, having said that, a lot of the managers I speak with, their goal is to hit 7, 8, 9, 10% in any market. And so they seem to be delivering on that. The question is, last year, as you and I both know, when we spoke, December was a very rough month, and hedge funds had their worst year since 2011. So just because things are positive now across the board doesn't mean they'll stay that way. But I think the idea of a hedge fund manager is to weather those storms. And there's a lot of things on the horizon that could upset the market, and hopefully the hedge funds will continue to produce.
Well, you brought up the concept of fees, and I just want to clarify what 2 and 20 means. Do you mind just taking our audience through? Because the fee assessment they may be used to, if you're used to open market mutual funds, there's just a basis point charge, and it's embedded in the net asset value. But hedge funds and private equity, alternative investments, Tucker, they have a little bit different structure for fees.
Across the board, if you're ever going to invest in a hedge fund, typically, historically, it's been a 2% management fee just to put your capital in the fund. And as we talked about in your earlier segment, a lot of these funds will have pretty high restrictions on the barrier to entry to that fund. The performance fee and the high water mark will often be in the prospectus for their investor to say, if I achieve these results that I said I would, I'll be receive that sort of performance fee. Now, those fees have come down in recent years as hedge funds have underperformed the market. Typically now they're around 15%, but that's definitely something to consider every time you're going to evaluate a hedge fund or private equity fund, the different fee structures. And
fees matter, right? I mean, at the end of the day, fees matter,
sure.
even to people who are accredited investors or pension funds. When it comes to allocations, I mean, just to kind of level set for the audience, you talked about some of the volatility in the market. When we last talked on the podcast, we had some tough times and hedge funds had underperformed. But are you finding that most holders of these types of investments are longer term holders, meaning they're not just hiring and firing on a daily basis, they're not just trading, and they're not also allocating 100% of their money in the pension fund or the sovereign wealth fund to it's usually a sliver of that, right?
Absolutely. And usually 20, 30, 40% of that portfolio is going to go into hedge funds. Typical lockup periods are anywhere from 6 months to a year. In the hedge fund space, obviously going to be longer for a private equity fund. But I think it's you will have fund of funds still and fund of hedge funds that are still kind of turning over capital more quickly. But predominantly, you're going to put your capital in for at least a year because the hedge fund needs that liquidity to be able to execute on their strategy. If it's a structured credit deal in Argentina and you're pulling your money out too soon, you're not really giving your hedge fund, that manager, that CIO, a chance to operate and execute on the strategy that they said they would. So it very much matters for a hedge fund to have that capital. But obviously, as the market could potentially take a turn, if you don't have complete trust in your manager, then you put yourself at a huge risk because it could be a while before you see your money.
Yeah, because what you're referring to is liquidity gates and lockups that can be in the period many months. That typically doesn't exist in the open mutual fund arena where you can trade in and out. Though we're not recommending you do that, but you're right.
Restrictions for sure.
Yeah.
Oftentimes they're quarterly, sometimes monthly, and meaning you need to trigger that from your asset manager when you want to pull your money out. But it still might be 90 days before you're able to do so.
And that's why, going back to segment one, the due diligence, the knowledge, the understanding of these investments, which have performed well. They do, they are there to mitigate and help improve, add alpha, which means add additional return to the portfolio. And they had success over the long-term track record, and you need to give people the time. And that's why the due diligence to understand the investment philosophy, the team, the people is really important.
I totally agree. And to build on that, Jeff, you could be the best trader in the world. And as I mentioned in the earlier segment, who you work with as a service provider, who is providing you that legal counsel, that administrative services, you need to have, that's a great place to invest. I can't emphasize enough the importance of finding a good COO for a hedge fund because there's being a good money manager and then there's being a good CEO. And sometimes those don't often align. And
Absolutely.
It's so hard to build a team and pay for the bills and find a place to even start trading before you even open up your books. So I think it's super important that you understand the team that you're investing in.
Absolutely. Well, Tucker, I want to say thank you very much. I know there's a 5 or 6 hour difference from where you are to where we are in New York, but appreciate you getting up with us this morning to talk about alternatives. Very informative, and would love to have you back on in the future to keep our audience abreast of this market. So enjoy the rest of your weekend, and we will talk to you very soon, my friend.
We should. We've got a big Brexit vote tonight, so the European investment region could change overnight. So let's stay in touch, Jeff, and thank you for the time.
Awesome, bud. And that wraps up this episode and this week of BRN AM. Hey, have a financial topic or someone of interest you think we should interview? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. And don't forget, you can also check out the weekly wrap-up in the Weekly Pulse every Saturday. And don't forget about our podcast, BRN Weekly, which features a lot of great contributors from all across the spectrum right here on BRN. So until Monday, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take